Okay, today's report is in two parts. First part is about the current construction figures. It's a leading indicator that can help us figure out where it's all heading. And the second one, I'm going to read you an article that is also very telling. So stick around.
And tools down, how the construction industry is facing the biggest downturn since the GFC.
Well, all right, that kind of set the tone. So I hope it didn't spoil it for you, but that kind of tells you what's to come in this report. But let's hear it out.
The boom in housing and apartment construction is likely to become a bust. A respected property forecaster is predicting the largest drop in building work since the financial crisis. The biggest falls are expected in the big states, and there are concerns about the flow on to the economy. Here's Carrington Clark.
Has been a key driver of economic growth in recent years.
And there are concerns about the flow on to the economy. Here's Carrington Clark.
Residential building has been a key driver of economic growth in recent years, but analysts are warning that with prices heading south, construction will follow.
Well, it was investor-driven. You know, a lot of the boom was investor-driven. It became highly speculative, and that was investor-driven. And similarly, the bust is becoming investor-driven.
BIS Oxford Economics forecasts new housing construction will shrink dramatically over the next 2 years, down 23%. But the pain won't be evenly spread. Victoria, New South Wales and the ACT are all slated to slump by nearly 30%, while Queensland, which has already fallen from its peak, is expected to drop another 15%.
I mean, over the last few years, it's been a big driver of growth in the economy, but what we're saying is that over the next 2 years, it's going to be a drag on the economy, and we're going to need other sectors to step up.
There's no signs here of a slowdown in construction, but we do have a recent example of what happens when it does. You just need to look to Western Australia and the end of the mining investment boom. New housing construction peaked in WA in 2015 at nearly 32,000 properties. Next year is expected to be around half that. David Hall knows all about boom and bust. He was made redundant as a mining engineer when the WA boom ended, and now works in property in Perth.
I mean, just a little comment, this is a bit funny. So he goes from one bust industry to another industry that's about to see a bust. So unfortunately, I think this man is going to get another redundancy. If it wasn't said, it would be funny.
We just basically saw people struggling to pay bills. We saw unemployment edging up. We saw people who are highly qualified driving taxis because it's the only work that they could get.
It's not all bad news. Commercial construction like factories and office towers is still on the rise, just not enough to offset the slump in housing.
Carrington Clark there.
And as promised, we've got this article from News, part of the business News ABC, where the title says zombie blocks to pull Sydney apartment prices even lower. Sydney's falling apartment prices look set to continue into the next decade, with leading economists and real estate analysts predicting ongoing construction and the rise of so-called zombie blocks will pull prices lower. The prediction came as new figures from real estate website Domain, released on Thursday, showed the average apartment price in the Harbour City dropped 3.5% in the 2017-18 financial year to $737,000, and the sharpest annual decline since the global financial crisis. The falls are being driven in part by continued apartment construction in New South Wales, with Australian Bureau of Statistics figures released earlier this month showing more than 66,000 apartments are under construction across the state. An estimated 20,000 apartments are lying vacant in New South Wales, with the empty homes labelled zombie blocks in the industry. Fall set to continue. Sydney-based SQM Research Director Louis Christopher said the city's apartment prices were nowhere near the bottom. To what magnitude we don't know yet, he said, but they'll continue to fall. Mr. Christopher said two likely scenarios would play out in the Sydney market, either a sharp fall or a longer stagnant period similar to what was seen in Sydney market from 2004 to 2012. You can imagine what I think is going to happen, and most of the viewers and a lot of the viewers. Continuing on, this downturn is more than a retraction of credit, he said. It's more becoming demand related. Investors don't want to catch a falling knife. Cameron Kusher at real estate analyst firm CoreLogic also believed the falls would continue. The Sydney market on our data has been down for 12 months and there's real stretched affordability out there, he said. There's tighter availability of credit and people don't have the same borrowing capacity. The main figures also show Sydney's median house now sitting at 1.144 million, down from its peak of 1.198 million in June 2017. So current median house price in Sydney is 1,144,000. So 1,144,000, but that's down from nearly 1,200,000. Mr. Kusher said, according to CoreLogic data, prices for apartments and units were holding up better than as they were more affordable, but that may not last. There's a lot of stock apartments sitting there, and that would suggest rents and apartment prices will continue to fall. Zombie blocks trigger new pressure. In a separate report out this week, BIS Oxford predicted New South Wales would see falls in apartment blocks of up to 26% over the next 2 years. I'll let that sink in. BIS Oxford predicted New South Wales would see falls in apartment blocks of up to 26% over the next 2 years. The report said Victoria was set to drop by 29%, Queensland 15%, probably not as much because they've already dropped. So Queensland 15% and the ACT 27%. It came as the New South Wales government continued with plans to build 61,000 houses on average each year until 2021. This is madness, if you ask me. So 61,000 houses, of which you'll have 3, 4, 5 or 6 occupants in each every year. 61,000 until 2021. That's a bold plan. Now let's have a look at regions. Sydney apartment prices falls. This is quarter over quarter, year over year. So Canterbury, Bankstown, that's gone down about 3.6, or year over year 5.3%. What's interesting here is the Lower North Shore, which is where I live, quarter over quarter, so the current or just previous quarter compared to the quarter before that, it's dropped 7.7%. And year over year is not looking much better either. Although it's a beautiful area and I like it, and it's probably desirable, prices were probably pumped up so much that they had to drop. And that's the biggest drop, Lower North Shore. And then we've got another pretty bad is somewhere where a lot of people like living, is Northern Beaches, 5.7% year over year. And south, I'd say that's like Sutherland, 6.7% year over year. And that's pretty big as well. The only thing that's actually risen substantially is Upper North Shore. So I think people are being pushed out from the Lower North Shore. They still want to stay in North Shore, so they've gone up Upper North Shore. So the areas of Hornsby, between North Sydney and Hornsby, and the west has also gone down. So this was a bit kind of shocking. The report says the Victoria was set to drop 29%. I mean, this is crazy. But it is what it is. We'll see how it goes. I'll keep you posted. Thanks for watching. Talk to you in the next one.